Hey, before you watch this video, I just wanted to make a statement. There's a customer fairly early in the webinar. We were just getting ready to review the forecasts and show what had happened in the market, review some trading setups and ways people could use the software. And right from the get-go, this customer was just pretty belligerent, very frequently typing into the Q&A, asking questions, kind of the stereotypical of, if it's such a good engineered product, why aren't you and anyone associated with you, why aren't you millionaires by now? And that question generally comes off pretty hostile, especially when the customer hasn't had an opportunity to see even how the software works, understand the person that he's talking to. And it's one of those scenarios where during a webinar, a lot of people don't see a lot of the garbage and the vitriol that's coming through in a presentation like that. It was a fair question, and while I was attempting to answer it and have a respectful conversation, the customer just got really belligerent and didn't want to hear anything that I had to say. So you'll see there is an explanation to that question in the video. I do want to be completely honest and transparent. At this point, we are an engineering company. I'm mid-40s right now. The average trading customer is somewhere in the 60 to 70-year-old range, at least in our experience. And so I'm learning as I develop this code, preparing, hopefully sometime by my late 40s, early 50s, to be an independent trader. And I'm pretty clear about that with anyone who wants to listen. Most of the people that I've met, average learning curve before someone becomes a successful trader is around 5 or 6 years. And so I'm right on schedule with and very comfortable with my progress as both a software developer, a teacher, graduating into a full-time trader. And this year especially, I've crossed a lot of things off the list in terms of comfort factor, things I wanted to be comfortable with. And that discipline just sort of crystallized here 2018. And I'm very happy and comfortable with that. But in the meantime, I'm really good at building things that people who are already there have arrived at that level of maturity and discipline. I'm very comfortable with teaching them how to use what I've already built. But I go into that in the video. I did want to follow up and let everybody know that I followed up with this customer via email. I gave them open pass access to any customer they wanted to talk to in any market that they were trading, futures or Forex. I told them if he wanted to use the software, I would teach it to him for free. I'd let him use it for free. He could evaluate it, post his results. And as is usually the case, very typical with someone like that in the webinar who's just really angry, looking for something bad in everybody. I never heard from them. So they get really brave, they come into a webinar, they shake up and upset the person, and then kind of bow out. If you did that in real life, I don't know too many people who would kind of run into a restaurant, scream at the top of their lungs, this food is horrible, and then run out the restaurant. But webinars, people get really weird. So wanted you to know I did follow up, I did answer the question, and we're going to continue to move forward in a positive, healthy way. We just want to help traders and help people achieve their goals through the software, and that's kind of where we're at right now. Thanks for watching this video. The class was a great one. And if you have any questions, please type them down below in the comments. Thanks again.
It's a new song called Freedom, y'all. Just released it today. We set it free out into the universe. And I'm going to set myself free out. I'm just kidding. Not off this rooftop. I almost had you, Captain. Hey, hey. I want you at your computer screen to just get them hands in like this one. Oh, yeah. Oh, yeah. Ooh, the words I found, can't leave it alone. Every day when I find you breaking from my chain, super kind, super kind. Hey, I'm looking for free. I gotta get free. You'll give it back to me. It's my simple free. Come on, y'all. Get free, baby. Tired. Drink up, baby. Make love. Get free, baby. Tired. Drink up, baby. Make love. Faces spreading all over my mind. Chasing and stuck in the night. I've been searching around, turning every stone. On the words I found, can't leave it alone. Every day when I find you breaking through my chain, Superman, Superman. Hey, I'm looking for me. I gotta get free. You give me that free. It's my security. Get free, baby. Tired. Drink up, baby.
Good afternoon, everybody. We're going to get started here in about 4 or 5 more minutes. Welcome on board.
Hallelujah, walking right through it. Holy, holy, make me feel holy. Hallelujah, walking right through it. Holy, holy, make me feel holy. Hallelujah, walking right through it. Holy, holy, make me feel holy. Hallelujah, walking right through it. Holy, holy, make me feel free. I gotta get
Hey, good afternoon, everyone. Welcome on board. It's a privilege and a pleasure to be with you here today. I'm going to turn the light on here so that I can turn the camera on for you. For those of you who are interested in seeing me in all my crown and shining glory, if that's something you're interested in. If not, just look away from the horror. Sorry about that. Here he is. Good afternoon. Today, we are going over time cycles. More importantly, we're discussing how banks are manipulating the markets to rig the game. So very few people who are not in the club can win, and the people that are in the club can and will and do. We live in a time where the wealthy are obscenely wealthy. And there's a point where I believe there's a point of no return where, when left unchecked, when you don't have a tension between obscenely wealthy and obscenely poor, when there's no checks and balances in the system, and you allow somebody to run the game, as it were, the line that they purport not to cross moves farther and farther away, to the point where we end up with huge recessions, mother blanker obsessions, recessions and depressions and crises, and no one's held accountable. And so we believe that if you want to play the game, you have to understand the rules. My father-in-law is a wonderful man, and very kind, very giving of himself, and I've come to appreciate him over the years. He's originally from New York, but one of the things I didn't understand was his obsession with NASCAR. How many of you here today are familiar with the American racing sport of NASCAR? Anybody? So NASCAR is supposed to be fair. Julius, NASCAR, everybody has the same car. You get the same engine, you get the same car body. The cars have to weigh the same, right? Everything is the same so that all the drivers have a fair chance. Okay, this way we know who the best drivers are. This way we know who the best pit crews are. It sounds fair, right? I didn't really understand the sport, however, until I started to learn how frequently racing teams cheat. Most frequently, the biggest and the most well-funded teams were cheating. The one that absolutely blew my mind, the one that they got caught doing, they took the car shell. This is a horrible drawing. But Julius, they dipped the entire shell of the car in a vat of acid. And they took off 0.005 inches of steel along the entire surface area of the car. The entire surface area of the car to make it several pounds lighter. Now, you would think there's a tremendous number of hurdles. Number one, you're going to need a huge vat. You're going to need a blank ton of acid. You're going to need a crew who specializes in it. You're going to need something for post-processing. Okay, and you think to yourself, that costs a lot of money. But you remember, we're dealing in a sport where they go 500 laps, and the winner is usually determined by 2 to 3 seconds. And so a few pounds over 500 laps can equate to millions of dollars. And so I tell this story to preface the conversation that NASCAR, in its limited tiny bubble, the NFL in its very small bubble, all of these sports are nothing compared to the monumental scale of the markets. We, you, everyone in this room today, the nearly 50 of you, have determined in your hearts that you're going to put your little beep beep car in a race surrounded by people who have unconditionally sworn themselves to take every opportunity they can to screw you, have unlimited resources, have no accountability, and really no morality, no sense of right or wrong beyond winning and you losing. Now, compare yourself to Goldman Sachs, compare yourself to JP Morgan, compare yourself to the largest prop firms, the hedge funds, all of these people with unlimited computational power, the best traders money can buy, the best computers and algorithms, all of those things. You've decided today, yesterday, the day before, that You're going to augment or replace your income in a game dominated by people who are sworn to steal, kill, cheat, rob, destroy, lie, manipulate, and obfuscate. And at some point along the way, you realized that the trading rooms don't work. Someone's sitting there telling you, get in, get out, get in, get out. That didn't work for you. You realized at one point that the lagging indicators didn't work for you. Uncle Bob's crazy up and down arrow system, up arrow, down arrow, black box, proprietary, blah, 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 blah. That didn't work for you. Then you went to the guru, the guy who said, if you just give me 10, 20, 30, 40, $50,000 in a weekend, I'll show you what you need to know, give you some finger sandwiches, tell you something mysterious, push your little hiney out the door on Sunday night, and let you figure out the details. And at one point you realized about 98% of people who said they had the answers were full of crap. They were selling hopes, they were selling dreams, they saw you coming a mile away. I believe there's a special place for people like that, waiting somewhere in the future, in the not too distant future, hopefully. Today is different. Today is different in so many ways. First, you have to decide, where are your moral boundaries? Are you going to drive your car that weighs what it's supposed to weigh? Are you going to follow all of the rules? Or are you going to get as much of an edge as you can and fight and play as ruthlessly as the people around you? Because if you want to play fair, if you believe that the market is a fair place where everyone's taking their best shot, and we all have as much of a chance of becoming wealthy as the next guy, then you should leave this webinar right now, because you're not going to hear the things you want to hear. You're not going to see the things you want to see. If you're a person who believes that everyone in the world is basically good, and you don't lock your doors or your windows at night and you sleep like a baby, this webinar is probably not for you. However, historically, there are 2 or 3 people at every Thursday webinar. And they say, Michael, I've watched all your YouTube videos. Michael, I've been coming 2 or 3 weeks now, and I keep waiting for the red flags. I keep waiting for my spidey sense to tingle. I keep waiting for you to trip up, you to slip up. I keep waiting for that picture of the equity curve that you're going to show me and promise me how wealthy I'm going to be. I keep waiting for that picture of the Lamborghini Hurricane, whatever the car is that you have, where you tell me I can have one just like you. I keep waiting for these things and you never show them. I want to play the game the way they play the game. I want to know what they know. I want to compete on the level they compete at. But I've been waiting for proof. Then this webinar is for you. So there's 2 groups of people here today. And we're going to talk about a universe that is foundationally constructed, whose communication network is based on time. The fabric of time surrounds us. It is the one commodity you, as of right now, cannot extend 1 second forward into the future on your own power. Okay. I met with a doctor several months ago, and he said, listen, you're 46 now. This is a very important age for you. There are some things that I see here. Nothing's wrong. There's no immediate need to be concerned. However, based on your lifestyle, based on the answers to the questions that I've asked you, based on these markers in these tests that we've run, you have to make a decision, because of the way that you're living, because of the things that I see, there is less time available to you, statistically speaking, to enjoy life. But if you make some choices, if we make some old habits go away, some new habits appear, if we make some very simple, consistent choices, the time available to you will be significantly different in that world, in that sphere. Time is the ultimate commodity. And as you'll see here today, it is the playground of the wealthy. It is the Morse code of the mega rich. And I can prove it. I can prove it. I prove it every week. Michael, how do you propose to prove it? What do you mean when you say you prove it every week? Well, let's talk about that. Let's talk amongst friends, shall we? Turn the camera off. What I do every week, and I've never changed it. So, number one, in terms of consistency and transparency, when you read reviews or you talk to people who have entertained this and kind of washed it away as impossible, or read a review by somebody online who says it's impossible, I want you to understand what you're about to see. There are no mirrors here. There's no smoke. There's no deception. Everything I'm about to show you is based on a 100% transparent experiment to show you, to prove to you what the banks are doing and how you'll have to cheat to play and win this game. Every Tuesday afternoon, evening, I send out an email. And that email has webinar histogram forecasts for Wednesday and Thursday. Every Tuesday evening. I've done it now for almost 10 years. Sometimes it's a Wednesday morning if I'm sick or if I forget or I have to spend time with my family. I send an email out. That email has a link. The link has histogram forecasts based on time for Wednesday and Thursday. Okay. Those histogram forecasts have blue lines at the top. And those histogram forecasts have white lines on the bottom that look like rulers. And we're going to talk a little bit about what those things mean. But I want you to understand there's no way for me to fake what I'm about to show you here, because on Tuesday, I gave you all the information that we needed. And then Wednesday went by, and then Thursday went by. And now here we are, the nearly 50 of us together, coming out of the markets on Thursday to ask the question, what the heck happened at those times? Did they work or did they not work? Did they work or did they not work? Now, spoiler alert, you do this for 10 years. If you're around that long, what you're doing usually works, because if you're not doing something that works, this industry will cart you out. They will tar you, they will feather you, they will set fire to you, and you'll have to rechange the company name, you'll have to rebrand 3 times. How many of you remember a company called Traders International? Anybody? Traders International. You didn't know anything about trading if you weren't a member of Traders International for a while. Juan, how much do you hear about them now? Right? School of Trade. Day Traders Academy. All right. These are all companies that they burned really bright for about a year, for about 2 years, and then poof, gone. They couldn't sustain themselves. Their reputation destroyed them, but they got the money they wanted in the short period of time that they had. Okay, like any great scheme. This is not a scheme. Let me tell you why. We're going to understand what these histograms are telling us. In fact, I gave you a book, A Hitchhiker's Guide to the Histogram, that explains what these different patterns are. And then we're going to look in a moment, and we're going to decide if what we were expecting to see, Jeff, in fact, played out. Tehran, we're going to look and see if, in fact, these times played out. Okay, Jason, are you ready? Okay. First, let's establish what the benchmark was. And I'll pull the link up and we'll make sure we share that here with everybody. If you're just joining us, welcome on board. We hit the ground on time today running, and it's exciting to have you here with me. You just pull this over. Okay. So we'll start. Where is my Jimmy Jongi that we looked at earlier? Pardon the interruption. Okay. All right, sweet. So this is the link to the page that we looked at here today. Okay, Mike asked a fair question. Mike, how long have you been trading? My name is Michael too. Let's go back and entertain that conversation. Mike's been trading for 5 years. Mike, in 5 years, how much money have you made? Enough to live. Okay. So Mike, let me ask you another question. Have you ever heard of a company called tradingschools.org? Okay, that's a good question. A man named Emmett Moore or Dr. Dean Handley. Those guys, right? They professionally investigate. Okay. So Mike, here's a good question that I always ask people. Here's a person who has personally reviewed the websites probably of 100 different vendors, right? Let's say 100 plus vendors. And we, by the way, got 1 star. They said we were frauds. Okay. So Mike, here's the question I want to ask you. If there are websites that give people 5 stars, meaning they say, hey, this makes money. You know the one question nobody ever asks? How much money have the reviewers made trading the programs they gave 5 stars to? Have you ever asked, Mike, someone in the forum who gave a bad review how much money they've made? Have you ever asked a review site to publish their audited trading records if they have access to the best of the best of the best? Okay. Nobody ever asks that question. You know why? Because it's all a lie. It's all a lie. Why do I do what I do? Why do you sell something like this? Okay. Mike, there are 2 kinds of people that I've met in 10 years doing this. Okay. There are people who are energized by trading. Mike, I'm answering your blankety blank question. I'm asking you to be respectful, and I'm asking you to treat me with respect. You came to my house. Do you go to people's house and treat them disrespectfully, or when you're a guest in their home, do you treat them respectfully? Because I would never talk to you the way you talk to me right now. Okay. Do you want the honest answer, or are you here just to agitate me? Because there are people who come, they just want to agitate the vendors. It makes them feel empowered Makes them feel big in their very small worlds sometimes. Never having met you, I don't know. What would you like, the honest answer, or would you like the dishonest answer? Yeah, I know. I want to understand and answer him respectfully, but I don't know how to come at it. So I'm waiting. We can deal with it or we can move on. It's up to you. Please don't play the offended one. Okay. Mike, why are you here? Let's back that up. Why are you here today? Okay. Here's the answer to your question. I was starting to answer it, and then you decided you didn't want to hear it, so I'll answer it a second time. There are two kinds of people in the world in regards to trading. There are people who are energized by trading, being in the market, selling and buying. This technique, this methodology was popularized by an author named Jack Schwager, author of the book, The New Market Wizards. The Market Wizards. I think I spelled his name wrong. And Schwager determined that there are two types of people who are interested in the markets. There are the puzzle solvers and there are the frontline athletes. People who are not energized by trading. So Mike, this is the equivalent of somebody who builds the hammer and somebody who builds the house. Are you with me so far, or am I going too fast? Okay. Too slow. Okay. Well, I'm sorry. I will try to move faster for you, Mike, and use bigger words with more syllables. Okay. Mike, I'm not energized by trading at all. Matter of fact, I don't like it much at all. My personality type, my Briggs-Meyer personality type, is an ENFP. An ENFP, when you survey traders over the course of 100 plus traders, is the least likely to succeed at trading, but the most likely to succeed at seeing patterns. Okay? Mike, I don't suppose there's something you're not good at. I suppose you're good at everything. If we were to ask the people in your inner circle, they would say 5 stars across the board. He's amazing. Okay, now when we surveyed traders who were energized by trading, do you know what perfect personality type came up? INTJ and ENTJ. An ENTJ, Briggs-Myers personality type, when we surveyed 100 of our customers, there was an 80% chance that they were net profitable. 80% chance based on the answer to 70 questions about their personality type. Mike, I'm going to guess, I'll give you the link here. You can take the results and tell us who you are by the end of this test, by the end of this webinar. Why don't you take this test and tell me what your answer is? Here, I'll post it in the room. All of you guys can do it. I didn't know today was going to be that day with that guy, but here we are. So let me post this into the room and we'll answer the question together. There's the chat. I'm answering your question. Do you not want the answer to the question? He left. Okay. Sorry. To finish the answer to the question, he called me a snake oil salesman. In a second here, I'll show you that's not true. I'm not energized by trading. In fact, I have a really hard time with it because my personality type is an ENFP. When I take the questions and I answer them, the answer that comes back is this one. And Steve, I want you to see what my result is. It says the campaigner. Can everybody see what the graphic shows for somebody with my personality type? Bob, Carrie, Mary. Here, you can put the link in here, and you guys can see. Okay. So if you want to know everything there is to know about me, it means that, Bob, I see patterns everywhere, and I can't do the same thing over and over again. It's torture for me. Anything that I have to do that involves any modicum of discipline is one of the hardest things in the world for me to do. And it took me 10 years to get to the point where I am right now. The person who's really good is an ENTJ or an INTJ. ENTJ is the commander. My daughter is an ENTJ, and she is dating an INTJ. The INTJ has the highest probability of success trading. INTJ is known as the architect. INTJs plan their life 30 years into the future. They are determined to succeed. They trade with no emotion. They take all the information in. Look at what an INTJ does. All the information and data there, and they succeed. So if you want to take that personality test, if you're an ENTJ or an INTJ, there's about an 80% chance you'll succeed as a trader based on the studies that we've done. If you do an ENFP, of all the traders that we surveyed, 1% of them are successful. And so in response to Mike's wonderful, sarcastic troll, here we go. Everything I've been doing for the past 10 years is helping me understand how the market works as a trained engineer, so that when I finally trade, I know the rules and machinations so well that I'm calm as opposed to scared, blankless. Now, as a feeling personality type, I feel every trade like a hot emotion. Okay. Over the course of those 10 years, I've developed something that, put in the hands of people who are net profitable, actually works. So if you're an INTJ, if you're an ENTJ, in fact, if you're anyone with a J in your personality profile, what I'm about to show you is gold, in the sense that you don't have the same weaknesses and downfalls that I have. The good news for you is that my personality type can build and teach, meaning I have a gift and an ability to teach people how this stuff works. I build good hammers. My job for you guys is to give you the hammer so that you can build the house. Now, what I'm about to show you is completely independent of any of this, meaning what I'm about to show you, based on the experiment that I gave you, is sort of helping you understand what I've been doing for 10 years. And that offends Mike, I guess, for some reason, but we'll kind of put that behind us here today. So when I sent the link out, sorry about that interruption, but I determined that I wasn't going to run away from those guys when they asked those kinds of questions. People are mad when you don't show them you're a trader and a tool builder. Somewhere along the way, they wanted to believe, they were told that you needed to be, you were both. But one of the things that I've learned, and I'll leave you with this last thought, the best traders are the worst teachers. The worst teachers, the best teachers are the worst traders. That is unfortunately a universal truth that I've also discovered in 10 years. How many of you have experienced that modicon, that little nugget of knowledge? Somebody that you met who is making $10,000 a day, $30,000 a month, when you asked them why they did what they did, what were their rules, they couldn't explain it. And then the guy like me who's figured it all out but lacks the emotional fortitude to implement it, you look at it on the screen and you say, my God, if you just did that 6 out of 10 times every day with 2 contracts, you'd be a millionaire. Why aren't you doing it? I don't know. So what I've developed here is a system that removes me from the loop. So on Tuesday, I sent this link out, and then I'm going to copy and paste it here into your chat box. I'm comfortable with who I am now, and I'm comfortable explaining why. I'm on a journey, I'm on a path. And people don't want to hear that answer, it's fine. But on Tuesday, I sent a link out. I'm going to look at a couple different markets today. We're going to start with the euro. In the euro currency, on a 3-minute chart, I had this histogram. I had this histogram, right? Right. So all of the blue lines, what do those represent for Wednesday? Ladies, Ray, Richard, what do all the blue lines represent? They represent times in the future for Wednesday, for Thursday, that we were expecting selling pressure. The only reasons these lines exist, the computer was able to project them or find them, was because over the course of the last 2 weeks, these are times where the banks were consistently selling. Yep, Brian, you're in much better shape than I am. Brian says he's an ESTJ. About a 70% chance of success. All the lines on the bottom of the chart are times where the computer consistently found buying pressure. Okay, does that make sense so far? So when we go back, and we look at the times that the software I built for you found, I had given you times for the euro currency for Wednesday in advance, and I had given you times for the euro currency for Thursday in advance. Okay, now question. Those of you that are still here and not deeply offended by my truthful dissertation on why I'm a POS when it comes to trading right now. So here's what remains to be seen. What did the times do when we got to them? Now, there are a number of ways that I've determined to trade with time. And in my pursuit of mastering my inner demons and essentially engineering all of the unknowns out of the market. And it's taken me almost a decade to get there, but I'm there. One of the things I've determined, Gary, is this. When the trend is down, Brian, my best shot is focusing on the times that are supposed to push down even farther. Does that make sense, everybody? When the trend is down, the times that are going to be the most profitable for me to focus on are the times where the market is supposed to go even further faster. Okay, we talked about this last week. We talk about it in every webinar, for crying out loud. It's in all the recordings. Vice versa. If the trend in the market is up, and we're watching the histograms down below, the times, Mike, that are going to be the most profitable for me are the times that are in the direction of the trend. Make sense? Okay, so I want to show you, since Wednesday, what happened in the euro currency at those times. So this is Wednesday, and Wednesday the euro currency was down. All right, now we start the clock here right around 2:45. That's 7:45 London time, almost 8 o'clock. I figured that was a good place to start. And here's what I want you to see. I'm going to pull these histograms down because you already had them in the email that I sent to you. And I want to show you signal by signal what I was watching for. Okay? So at 2:45, we're waiting for selling pressure. And at 2:45, the market is still above the moving average. And Brian, what I waited for was a close below. This is a 120 EMA. I've used it for 13 years now. I haven't changed it once. It makes a lot of you angry because you have better moving averages. But I stick with it because it's what I know. And so at the close of the 2:45 bar now, I have a selling pressure signal that is now in the direction of the trend. And what I've done, Seneca, is I've marked that location and then sold it until the next opposite buying pressure signal. Do you guys see that? So pretty basic entry exit plan here. And we'll go through 2 days of this, from the London up through the US session close. No Asian stuff because it's the euro dollar. Okay, 3:15 comes. That's the next selling pressure time. I'm going to sell and hold the market until the next buying pressure time at 3:42. When I did that, it was a 55 tick loss as opposed to a 75 tick win. All right, ready? Buying pressure, buying pressure, buying pressure, buying pressure. The next selling pressure window was at 4:42. So if this is when the banks were going to push down again, I had a window lasting until 5:27. So I have my stop above the candle. I'm looking for a short at 4:42. And I'm holding it to 5:27, which is the next time, according to the histogram, that I can expect the banks to try to push back up. And when I did that, Bob, it resulted in a 110 tick drop. Now I want you guys to think about that. Again, snake oil salesman, right? Here we go. I told you on Tuesday morning or Tuesday evening, about 8 hours beforehand, that the market would drop at 4:42. Okay, at 4:42, Brian, can you see that? It went up 15 ticks, and then it fell before the next white dot 125 ticks. Have you seen that? Can everybody see what happened at 3:42? At 3:42, 8 hours after I told you to look for it, Brian, what happened in the euro? Do you see how it exploded up? Like letting a lion out of a cage, right? Okay. Nah, he's fine. Don't feel any anger towards him. He's where he is in his journey, and he's fine. He'll figure out what he's got to figure out. The next signal, Brian, occurred at 5:33. And at 5:33, the market moved up a little bit, and then it dropped. Now, here's the thing. If you held it all the way to the end by the next buying pressure signal, Brian, you were only 5 ticks ahead. But Donald, it made it 95 ticks down before it retraced, having gone 15 ticks up. So it went 10 to 1 in the other direction. Can everybody see what happened at 6:09, about 9 hours after I gave you the signal? Seneca, does that look random to you? Could I have faked that in the euro dollar here? Could I have faked and made the market go like that at the time I told 18,000 people it would go up? But I digress. 7 o'clock in the morning, lunchtime in the UK, is the next signal with trend. And at 7 o'clock, about 10 hours after I told you to watch for that time in the direction of the trend, the market closes at 8:05. And now look, Seneca, it drops straight down 170 ticks. But if I just hold it until the next signal, it's 20 pips. Okay, so there's over 150 down. Richard, I can apply this to the euro US dollar, and I think the signals would be similar because the markets move at the same time generally. They might be off a few minutes based on spot versus futures. Okay, so do you get the point of what I'm doing here? If I see a trend signal, it either hits the stop or we close it out by the next and opposite buying pressure signal. Everybody understand that experiment so far? Okay, that was yesterday. Here was today. And I kept track of all the results except the last one, and we'll add that in here. When I kept track of all of those things, just to get in with the trend, get out at the opposite signal. Seneca, here's what I have using the times that I sent to everybody on Tuesday. Can you guys see that? Okay, now, there's some interesting things of note here. How many stop outs were there? And again, I'm not trying to impress you. I'm just showing you what the data produced when constrained by a very simple rules-based strategy that I teach every week in my quest, my pursuit to understand how markets work. Okay, and so from 5 to 30, there are 25 setups, 12 a day, basically. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So out of 25, 15 of those setups were net profitable. That's 60%. Every week for 10 years, Melissa, I ask people, how accurate are the forecasts? And I always ask 0 to 25, 25 to 50, 50 to 75, or 75 to 100. Not one time in 10 years has anyone said less than 50 to 75. And here it is, right in the middle. Now, I missed one trade here at the very end of the day. Can you guys see where it says 15.12? There's one more to add. At 15.12, the market was up here. We were still above the moving average. Richard, we had just experienced a stop out at 212. We got here. This candle closes below the moving average. It's a crossover, and it goes 30 pips down until the next signal. So if I count that one, I have to add one more plus 30 right here. We'll drag that down. We'll click on this and put one more little bump right there. How are we doing? How do we feel about this? This is the looking at entries and exits portion of the webinar. Okay, if we just got in and got out, got in and got out, that's what we would end up with just using the times. Over the course of the last 2 live pro rooms with my class where I have students, I want you to see here, I show setups in my pro room, starting at the 7th, which was yesterday, and going through today, Those of you in my pro room, you watched it. I actually uploaded the video of the room yesterday using the times that I'd sent you over the course of those 2 days. Melissa, can you see my percent profitability right there? What's that number? It's 58.9%. Okay, what was this number? 0.6? I can do this. So after 10 years with an engineer brain, trying to eliminate all risk from the market, I've uncovered something which apparently tells us what times certain markets do certain things. Let's go look at another market here. We'll take a look at the DAX. DAX is one of my favorites lately. Okay. Now, here is the market from 6:30 yesterday morning to the close. Oh no, I'm sorry, I went too far back. Here's today. Here's yesterday. Okay. So if you go to your INTJ, Mike, ENTJ, anybody with a TJ or a T or a J, the last 2 letters are very important. A T or a J, TJ together is really good. An INTJ is optimal. Okay, so for those of you watching right now, what I'd like to do is just kind of go through what happened at the times. Richard, that's amazing. Yeah, Juan, you're doing good. So here's what I want you to see. Again, based on the links that I sent you on Tuesday, here's the DAX. And these are the times that I sent out, right? So everything you see on the bottom of my screen is what I sent you guys 2 days ago. Now, here's what I want you to notice. Let's just put arrows near the times where the thing we were expecting to see took place. Is that an okay thing to do? So would you agree with me that if we were waiting for 503 to produce an up move in the DAX, that 503, Richard, produced an up move in the DAX? That I'm not using some kind of cherry picking magic to use your brain, to move your brains like a Jedi mind trick. Okay. At 554, we were expecting selling pressure. And at 554, we got selling pressure. Now, all we're going to do here is just work our way through this market together. Ready? At 621, we have a small bump up. And then at 627, another drive down into a new low. That's 4 in a row. 651 was the next signal. And at 651, the market drives up. Richard, 751, we finish where we started at. Okay, we actually finish a few ticks lower than where we started at. 809, we were expecting a push up. This is one of our signals with trend, right? At 9:15, we were expecting a push down. It's small, but we caught them in the middle of the pivot. Can everybody see this? The candle opened and it drove straight down in the DAX, $20. When was the next signal? The next signal was at 9:51. It was in the direction of the trend. Again, if you got in and you held it to the next signal, you were up $32.50 with no heat, zero, zilch, nada, nothing. These are all signals that were given to you the night before. 9:51 goes up. 10:03, we're going to call it a It did go sideways. The market was taking profit right here. 11:16, we're going to call that a It didn't go up. It was the absolute high of the move. This is a pattern 5 for those of you that are customers and recognize that. But here's something interesting. At 12:24, it goes down. 106, 230, do you see where it went down? Ding. And then 309, can you see where it went up? Ding! Euros. Sorry, Julius. My bad. Here's the question that I want to ask. From one snake oil salesman to another. I gave you the times and I gave you the directions on Tuesday, the night before any of this happened. Richard, about 12 hours later, can we all agree, or is there anyone here who doesn't agree with the fact that the times that we were waiting for the moves to happen matured and developed at least 60% of the time? He left. Mike left the webinar earlier. He's not here. We exhausted his patience. That's fine. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 good, and 1, 2, 3, say 4 bad. So 7 out of 11 is, what does that equal out to? 63% of the time. 64. Okay. If we scoot it forward into today, are we still seeing those kinds of patterns take place? Let's take a look. So let's look at 2 whole days of evidence, shall we? 318 up, 336 down, 4 o'clock up, 4:15, there's their open, down. 5 o'clock, we basically go sideways, but I'll count that as an eh. 7:33, we catch a pivot. It's a small one down, but it does put in a pivot at 7:03. 9:18, the market falls apart. No good. These two, 10:15, 11:15, ding. 11:30, ding. 12:24, ding. 2 o'clock, ding. 2:27, ding. 3:36, Are we still in that window of accuracy? Yeah, doing pretty good actually. Okay, let's take a look at a couple markets just so you see that this wasn't a fluke. This is crude futures today. And to get into crude futures, I want to teach you 3 setups. 2, last week I taught you the first 2, and I showed you executions in the YouTube video yesterday of what that looks like. I want to teach you 3 setups here today and take it a little further than we did last week. Okay, so when the market's moving in the up direction and we have a time signal in the direction of the trend, it's reminiscent of a behavior pattern, something that the banks have done in the past. And what we're going to do is we're going to put a stop right at the dot. The dot in this case is set 3 ticks away from the low or the high of the candle. You can change that value if you want it tighter or farther away. I've been using ticks, 3 ticks now for CL for probably since July when we first debuted this program. Okay, and so the entry will be at the close of that time candle. Does that make sense, everybody? If we have a signal in the direction of the trend is up, we're going to look for a possible entry in the direction of the trend at that time on the close of the candle. That's possible entry number 1. Possible entry number 2 is if we have a counter trend signal. Okay. If we have a counter trend signal, we're expecting consolidation, maybe even a small retracement. But then when the profit taking is over, I'm watching for a puncture. We call this a puncture trade. A lot of you have been doing really well with this tool, this hammer that we've built together. And so the entry for that is in the direction of the trade at the puncture of the dot, which again is set 3 ticks away from the high or the low of the candle. So we go long at the close of that candle, or we can go long at the puncture of the counter trend signal. Does that make sense, everyone? Anybody confused by that? We're essentially saying in this trade, which is a little less intuitive, when all of the selling is done, when they've exhausted all of the supply that's there and they're ready to continue, people start buying at the ask again and it starts climbing. When that little supply pocket is finished, we want to be in that impulse move. Okay. Setup number 1, we'll call this setup A, setup B. Now, if the exact opposite is true, if the market is trending down, then the highest probability entries will be at the times where the banks have exhibited a recurring tendency, a behavior pattern that it's repeating over and over again, to go down at that time. Okay. And so the entry for that will be the close of that candle right here. And the stop, of course, will be just above the dot. That one's pretty easy. We'll call that a C. If we have a counter trend signal, let's say a buying pressure time right here, we expect profit taking to take place. This is a place where banks will cash out their shorts, as it were. And so what I'd like you to look for are punctures in the opposite direction. So if we come below that area, it's basically saying, listen, all the profit taking is over, and they're either going to try to trip out the stops here or continue the trend. In which case, the entry, if you're a trend trader, I'm assuming a big assumption here that you are. Most of the successful traders that I've met over the years are trend traders. Then we're going to look for a puncture of that white line. Donald, does that make sense? I'll turn my camera off here. You can only take so much of my big head after a while. Okay. Now, let's take those basic definitions and we'll throw it next to a crude chart today. So we'll go ahead and we'll push this over here. We'll see how good my teaching skills are. Or maybe Mike was right. Snake oil salesman. Okay, boom, boom, boom. Okay, so at 8:36 this morning, there was a stop out. The market punctured that white line. My stop would be above the puncture candle, down 14 ticks. Man, at 9:15, close of the candle, down 14 ticks. Man, 10:21, signal in the direction of the trend, down 4 ticks. 10:54, I'm up 14 ticks. 11:21, there's my puncture. I'm up 26 ticks. Things are starting to look up. 12:06, Donald. That's a pattern C in the direction of the trend. I'm up 29 more ticks. 12:39, there's my puncture right here. It comes all the way back up, hits my stop, minus 10. 124, that's a pattern C, right? Anna, stand by. I have an answer for that. It's the third setup. you're officially the smartest person in the room because you anticipated where I was going next. And Anna, from 124 to 2 o'clock was another 22 ticks. Okay, so can you see where we're at so far, Melissa? Just using those two different setups, a puncture setup, a trend continuation, and then a trend entry setup. These are the setups that I taught last week, the week before that, and all the YouTube videos that I've put out. Okay, so now let's add them up. Snake oil, salesman, powers, engage. The positive trades were 14 plus 26 plus 29 plus 22. So a total of 91. When we subtract the stops, it's minus 10, minus 4, minus 14, and minus 14. So net 49 ticks, Donald, right? How many winners? 1, 2, 3, 4, 5. How many losers? 8. 3 rather. What's 5 divided by 8? There's that freaking number again. John Houston, you're right, I can. I'm better than I was, though. You have to admit that, right? I handled it a lot better this week. Okay, so progress. Now, Anna, you asked a very important question. And there's an advanced technique that I'd like to teach you if it's okay. And it's called the failure approach. So Anna, let's say, for example, that we have a moving average right here. Customers, pay attention. Let's say you have a downtrend here that starts to turn up. And John, there's a selling pressure signal. Okay, and here's the selling pressure candle. And there's our stop. All right. So Anna, the presumption is that we would come here and get stopped out. Yes, it is recorded, Mike, and I'm going to be done here in less than an hour. Probably about 30, 40 minutes left to go. Okay. What's your email address? I'll make sure you get a copy of it when it comes out. Go ahead and throw that in there. So Anna, here's the deal. Let's say the very next candle takes out the stop. Okay. So boom. Anna, it punctures that blue line, right? You with me so far? All right, Mike, I'll make sure you get it. So Anna, that tells me that the selling pressure is probably not going to be here. They're going in the other direction. So Anna, the very next candle that closes above the moving average is an opportunity to go long. Wait, what? Let's say it closes right here. What this is essentially telling me is we were waiting for a selling pressure, for a selling move. The selling move did not appear. When the selling move does not appear, John, it's an omission. Okay, they stood aside and allowed buying to take place. Does that make sense, guys? I used to call this a vacuum of power, and I know I spelled vacuum wrong. It's a vacuum, it's empty, it's a void here. So Anna, when I see that, it tells me that the trend is reversing at that time. For some reason or another, Anna, it was their God-given right to sell, and they didn't. They stood aside and they let prices rise. Wait, why are you doing that? I know what you're doing. You're pushing up here. This is one of the 40% of times that you go the other way. 35% of times you go the other way. So, Anna, you can enter on the close of this candle, which I call a crossover candle, because it crosses over the moving average. That EMA for me is like a membrane. Once it pops, it goes in the other direction. So that's possibility number one. And then you referred to the move that did the exact opposite. You had a very good eye for that. And so I want to applaud you. You did wonderful. Let's say you have a buying pressure signal up here. John, this is what Anna called out earlier. Let's say you have a buying pressure signal. And Anna, this is what you saw, right? There's your line in the sand where it shouldn't go past. And then we kind of had a candle like this. And then Melissa, it does this. Okay, so when it goes through that line, Anna, this is now a void of power. We were expecting buying pressure, but they stood aside. They let it go. There was an omission. Where are all the buyers? Oh, I know what's happening here. Ooh, but I can't do anything until what? Anna, when am I allowed to take a trend trade? If I'm trying to adhere to the theology of trend trading, I have to wait until it does this. It has to get its ass under the moving average, or you can't do anything. So the first possible opportunity to sell the market is right here. Okay. So this isn't a puncture trade. This isn't a trend trade or a signal with trend. It's a void trade. A void. There was a void of the behavior pattern. They stood aside. Okay. Now, with that fresh on our minds, does anybody see anything like that in the early morning session of crude? And it's cherry picking because it's after the fact. I get it. There is one, in fact, right here. It's a stop out and a reverse. And then Anna, there's a short sell right there. Does that make sense, everybody? This is a long entry right here using the void setup. And then there's a selling pressure entry right here using the void setup. Now, here's the thing. Rick, in the setups that I teach you and taught you last week, I advocate something called a min risk and a max risk. And so for me in CL, that means no trade has fewer than 5 ticks. No trade has more than 10 ticks of risk. So in each of these cases, ideally your stop, Anna, is below the crossover candle right here. And John, ideally your stop is above this candle here, but that's way too much risk. So 04 to 14 in this case would have been my max risk because I'm never going to chase a trade. So Anna, now, if that were the case, I can hold that trade until the next timing signal. I can hold that trade until the next time signal, which adds 31. And Anna down here. And if it's Anna and I'm saying Anna, I'm sorry. I've watched too much Disney Frozen. Do you want to build a snowman? That would be 73 ticks. So that adds another 100 ticks for about 150 ticks total net, hypothetically speaking, minus commissions and slippage and all that fun stuff, assuming you were filled. In how many hours? Eight o'clock to 2 o'clock. 8 hours. No, 6 hours. Anna says, at 10:54, do you hold because it is in a sell and you are in a trade? You can hold it, yes. For me, my personality type, I don't like to be in something and hold it. I like to be in and out. I like to take small bites. Does this make sense, everybody? Now, what's bizarre about this is what day of the week was this market displaying right here? If you take out those void trades, those trades, and you only have 50 ticks, this is the worst possible day to try to trade with predictive signals, because it's the crude inventory report. And if Mike had stayed, he would look at this chart and be like, holy cow, that's pretty amazing. So I want you to look after the report, Anna, right after the crude report comes out. Can anybody look at that chart and tell me that that was random? That the moves that occurred weren't choreographed? Does that look like a random chart to you guys? Or did the banks have a plan to do things at a certain time after the event? Pretty cool, huh? Any questions about that? Any questions about that today? Okay. Have a good week. Okay, now let's take a look at another market. Actually, let me show you the times that I did something this morning. How many of you guys remember my setup from this morning's room? On a no. Again, the result that I showed you earlier, these were the signals that I took with the 10 tick stops max in using the times in my pro room. So I was able to use the 10 tick stops in the DAX and crude and gold and CL and the ES. Bob, I'm looking at the one right now. Okay, why am I looking at the 3? So each week, this is a good question. Each week I have a very narrow window to convince people, because there is so much crap out there. So Bob, for ES, CL, GC, NQ, 6E, FDAX, what are the other ones? I'm missing one. There's one other one in there that I'm not including that I should have in there. I usually put the times 5, a 3, and a 1. And so the reason I do that, Bob, is that generally for most people a 1 minute chart is too small. And I would say at least 50% of the traders are looking at a 5 or a 3. Okay. But if I can show that the signals are working on a 1 minute chart as well as a 3 minute chart, if I go over 30 times and 24 of them worked, I've accomplished a statistical miracle, right? So I was just about to review the 1 minute setup that I took in CL this morning. And I wanted to teach you guys how to use the pattern in the histogram guidebook. So Melissa, in your book that's included in your handouts, there's a pattern here called 3 or chop. Pattern number 3 is chop. And so when you have a cluster of lines on the histogram, Anna, that are really close together like this one, do you see how it goes up, down, up in a short period of time? 9 o'clock, 9:02, 9:03. It's like a little rubber band ball. When you see that in the new version of the software, I got to put a new screenshot up here. What I look for, Melissa, is the following. Wherever the chop is, Bob, I block it off. So in this case, the histogram goes 2200, 2215, 2240, 50, blah, blah, blah. Bob, I look at where the price bars are, where the market ranges during that time. So far, so good. And then I watch and see which part of the chop it breaks out of. For example, and this is all from the book, the high at that point, Bob, was at 9 o'clock. Then the market ranged down here, 9:02, there was the low, and 9:03. So my range, Melissa, was this box. And I have a copy of the Pro Room this morning if you want to verify what I'm telling you actually took place. It did. I then posed two opportunities. Bob, it either breaks down below the consolidation area and goes 200% this way with a target at 100 and 200%. Or on it breaks out and goes which way? The other way. The other way. So Melissa, what do you think I did this morning? You know me, you've been watching me for years. Here comes the snake oil salesman. So Anna, I had my buy limit order right here, just above the range. I had my stop right here. Now look, 9:18 comes along, the market's supposed to go up until when? Until 9:26. Melissa, I hit my 100% target right at the time that I was expecting to see selling pressure. Knowing me and how long I can stay in trades, that was a pretty good run. 82, that's 18, that was 23 ticks. For me, that's miraculous. Okay. So this is an example of another setup that I teach, the chop trade. Okay. So that's an opportunity too. If you see a place on the histogram where the lines are going back and forth and back and forth and back and forth, you don't have to participate in that, or you can just block it off and say, you know what, I'm not going to trade that. So Anna, in keeping with our rules here, remember, same rules, we'll use the same three setups, right? 820, we're looking for a short. It comes here, hits the stop, -4. But now Anna, look, it closes above the moving average. That's a void setup, right? Failure at the 820, closes above the moving average, trend reversal. How long do we hold the trade? I've never taught this setup, by the way. If you're not sure what's going on here. Let's call this D. Everybody's going to be watching this recording tonight. And E. So Anna, this one's like a D, right? Over here. You're going to hold till 8:43. That's right. Bum 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 bum. Okay. That's 34 ticks. 8:43. Stop out. Boom. -4. 9:02 comes. You guys saw that entry. It was the chop trade. And I got in for the 23 somewhere around here. Yeah. if you took the trend trade. I didn't teach you the chop trade, so let's take it out. The first signal, Anna, would have been at 9:02. I had until 9:03 plus 5. Yeah. The next trend trade was a puncture trade. Ready? It goes through the blue line. So this would be a B pattern, right, Anna? 9:03 is a counter trend time. It goes through the blue line. And now I can hold it to the next signal or to a fixed target. I'm going to hold it in this case to 918, forgive me. 7 ticks. Everybody with me? Okay. 918 comes along, Bob. My stop goes below the dot, right? Or I hold it until the next signal if I'm not using a fixed target like the Pro Room. And so, Anna, there's 33 ticks. 9:35, the market opens. My stop goes just below the white line, minus 10. So from 8:20, we've had 7 trades. No, I haven't taken one counter trend trade yet. It was a counter trend time. No counter trend trades. Long at 9:35, minus 10. Okay, Anna, at 9:53, it punctures the blue line. My stop goes below the puncture candle. The stop gets hit, minus 6. Yep, I'm sorry, Bob. You're right. Good catch. And then, Anna, I have a void trade. An omission of power. It's an E. Can everyone see the E signal is right here? Candle closes below the moving average after this blue dot. Actually, it's just a plain Jane crossover. There's no E. Selling pressure signal. The breakout with trend didn't work. It finally closes below the moving average here. Now I can hold it. Boom, 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 boom. Plus 21. Counter trend trade punctures the line, comes back about here, stops it out. Bob, minus 8. No follow through. 10:15 trend trade hits the stop. No follow through. Minus 5. 12:23 candle clock crosses over. I have a max 10 tick risk, 64 to 54. Minus 10. Aww. 10:32, I finish by 10:34, minus 5. 10:45, stop out, minus 5. Okay, so have you noticed something about the size of the winners versus the size of the losers? I'm a loser, baby, so why don't you kill me? Enough with the singing, Lydic, holy cow. Puncture trade here, stopped out, minus 9, and here we go. Ready? On 11:15. Here we go. Boom, 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 ding. 51. Remember, I gave you all these times when? Tuesday. That was 2 days ago. Who's the snake oil salesman now? Not me. 11:45, right before lunchtime. Enter here. Stop taking out right there. Minus 4. 11:51 comes along. Lunchtime, we're done. Okay, so from 8 o'clock until lunchtime, let's add them up. Ready? Using 3 setups, mechanically based, stops, time targets, everything is known. Add up the winners. Ready? 34 plus 5 plus 7 plus 33 plus 21 plus 51 is 151 ticks. Now, for the bad news. There's a great joke I heard, by the way. I don't know if you guys have heard this or not. I'll tell you when we're done. So I got 151 minus 4 minus 9 minus 5 minus 5 minus 10 minus 5 minus 8 minus 6 minus 10. We're down to 89. We got two more here. 89 minus 8. Minus 8 is 81. So Anna, using those pretty basic setups, right? A, B, C, D, E. We come away with times 2 days later that equal 81 ticks. Now, here's what's really fascinating to me. How many trades? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 trades. How many winners? 1, 2, 3, 4, 5, 6. It's inverted. Using nothing but time, we're less than 50% profitable, but Bob, we're 81% in the green. Mathematically, statistically, Steve, is that probable or possible even? Do you see what I'm saying here? Then we come into the afternoon and you see the same stuff going on, right? Oh, so if you carry a trade there, there's a stop out. There's a small loser. 223 crosses over. Maximum 10 tick puts us at minus 13 right here. Okay. 242. The candle punctures the white line. The stop is above this candle. We never hit it. On and we finish by 312. That's plus 18. We just took out two losers. And now on at 312. How long do I hold it? I hold it until 331. There's plus 17 using a standard A setup. At 331, it punctures the white line. When do I hold it until? 351. You think we should get out right now, take the money and run? Minus 4, minus 10, plus 18, plus 17, plus 31. Hey, when did we give you the times and the directions for those? Chika, chika, chika. That would have been chika on Tuesday. Bum, 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 bum. Okay. So here's where we go from here. When you are focused on time, you feel empowered. You feel like you know what the dealio is. Okay? When you are using time, there is an empowerment here. When you look at this chart and you look at this histogram for the ES, which was sent out 2 days ago, there's an understanding of what took place. When you look at these signals, you go, oh, I see where I could have taken my shot. I see where I could have maybe gone in and gone for the gold here. Right? So now on all of a sudden, between those three setups, look at what we have. Ready? Failed puncture trade, failed trend trade, void trade straight up, trend trade, failed puncture trade, trend trade, stopped out. Failed trend trade, no puncture trade, failed trend trade, puncture trade short. It's all three of those things. And yesterday, the volatility worked in our favor. Did the market do what we were expecting to see in the ES yesterday at the times that we were expecting to see the moves that we saw? Are we in a 60% window of accuracy relative to what we were told by the software the market makers would try to achieve yesterday? If you're not sure, we can go back and take a look. And this will be the last chart that we look at. That guy sucked the life out of me. Okay. Look at the signals with me. Ready? 810, 925, 1010, 1220, 225. Can everybody see that? 810, 925, 1010, 1220, 225, 315. 810, 925, 1010, 1220, 225, 315. Is it going to be perfect every day, Anna? Are the signals going to be so amazing that you can run out to the Bugatti Veyron dealership and tell them to put you down for 2? No. But here's the thing. Did the software tell us where not to make a stupid decision? Yes. Did the software tell us where to not make a stupid decision? Did it give us a clue on the biggest, nastiest market on the planet? The ES is just funky, stanky, corrupt, manipulated, no way in hell, right? And yet, on the most volatile of days, it went all the way up, and Richard, it went all the way down. It went all the way up. Look at the range of the day. Ready? Anna, this is in response to your question earlier. That is a $62 range, not counting how far it was at the close. Joseph, there is an existing Ninja 8 version of this program. It's Ninja 7 and 8 compliant. Just have to email Ron at backtothefuturetrading.com. Okay. So here's my question. And I'm going to show you one more helpful hint before we finish up here today, because you've been really good and supportive with the heckler. So are the signals and directions in our 60% plus window of accuracy one day after the email? Are the signal times and directions in our 60 to 70% window of accuracy in the ES one day after I sent 18,000 people the times and directions? It took me 10 years to reverse engineer, actually 9.5. It took me 9.5 years to engineer a solution that would calm my nerves enough to know where I pretty much had a good feel for when the banks were going to do it, and more importantly, why. Know the rules that they were going to break. Now, those of you coming to Las Vegas to our customer conference, I'm going to be spending a lot of time teaching you about this next thing I'm going to show you. You'll notice that I have these lines on the screen. Anna, can you see these lines that I have drawn? Do they come through on the black screen, Wayne? Yeah. Okay. Now, again, many of you already have a system that you're using. You have indicators that you like. You're using volume, water flow. That's fine. Watch for those signals at these times, though. Now, here's the deal. You're going to have times, Wayne, where there's a big gap between them. You see the cavern between these signals here? There's one at 10:10, there's one at 12:20, there's one at 2:25. That's a big signal, right? Okay. I have learned over the course of this decade that time is a material, it's a fabric. It is constrained by the natural laws of the universe. It can be subdivided because it's fractal, because it is a natural material. So, Melissa, when you have a series of times that are spanned by a large gap, or you're looking for more trend entries, Anna, here's what I suggest you do. I want you to create a Fibonacci time extension tool. And I want you to split the space, Wayne, between the two signals into thirds. Do you see what I just did there? This Fibonacci extension is 33.3% and 66.6%, more commonly known as thirds. Okay. Time follows something called the law of oscillation. So Wayne, if the signal at 10:10 was blue and the signal at 12:20 is white, I have to cross the subdivisions and maintain the oscillation. So if this signal was blue, guess what the next signal is going to be at the first energy line? White or blue? To maintain the oscillation. Think of it like a wave, up, down, up, down, up, down. If this signal was blue and this signal is white, think of it like a wave. The next signal is white. The next signal after that is blue. Melissa, does that make sense? So if you're looking for subdivisions in your time signals and you don't want to mess with the, what's the word? You don't want to mess with the sensitivity. You can do what I just did. So 2:20, Wayne, the last signal was white. The signal on the other end of the border is blue. To maintain the law of oscillation, the candle to the left of that line, Wayne, is going to be blue. And then the candle after that is going to be white. Michael, Michael, Michael. So now if we take everything off, we take our arrows off, we take the vertical lines off, we take the time extensions off, and look at where those subdivisions appeared in that market. That's pretty amazeballs, no? And again, you can do it in between any two cycles. Just make sure they're not horrifically close to each other. So Wayne, you see the signal here at 3:15, the other one's at 4:35. If it's a white dot at the beginning, the next signal is a blue dot. The signal after that, Anna, is a white dot, which we would then trade as a B setup. I think that's what we called it for a short. So that technique can be extremely powerful. And again, it works across the board. Here's a YM chart that I drew up for us today. Here's a good example of that. So Anna, this signal here at 323 was a counter trend signal. The next signal, Wayne, was at 403. If I use that technique, I take my fib extension, I cross the void, which I can do in advance, right? Wayne, the next signal for me to the short side is where? White, blue, right here, right? Followed by white. It works everywhere. Works on daily bars, works on 1 minute bars, works everywhere. Okay, so Anna, that would have been a short entry right here. We would have held it till the next signal. Good for 109 ticks in the mini Dow with a stop where? 4 ticks above the high of the candle, 3 ticks above the high of the candle. Okay, if you didn't have that technique, and I know I'm showing you a lot, but I want you to see that there's some substance to this. Anna, you would have gone short right here. You see that? That's a C trade. I'm sorry, a D trade. At the crossover, hold it till the next signal, stop above where? The puncture candle. Boom, boom, boom. $208 ticks. 403, if you're still in that, you had a stop loss of 31. Okay, I'm cool with that. Any questions? So basically, in review, while you're asking questions, here's what we covered here today. We covered the difference between engineers and traders. We covered optimal personalities in regards to trading, which ones have a 60, 70, or 80% probability of success based on surveys we've done. We talked about a tool that we built that's been in existence for 10 years, where I gave you the times in advance, and then 2 days later we demonstrated both in my simulator account, in a YouTube video that I gave out yesterday, as well as multiple entries based on 2 setups and then a third, that the profitability ranged anywhere from 80 ticks to 100 and 150 ticks, depending on the market and the days. Yes, Joseph, plenty of room. People usually wait till the last minute for that. Okay. We talked about different setups. We talked about a trend entry setup, which was probably the basic setup and is also the highest probability. We talked about the counter trend puncture setup, which is a little less intuitive, but is a trend continuation signal. Then we talked about the void entry, which follows on the failure of a trend entry, but can be very powerful to re-enter the trend when it crosses the EMA and can get us back into there, basically a stop and reverse setup. And that's a brand new thing that I've taught. Any questions about any of those things? Because we've basically left ourselves with an inescapable conclusion that whether or not you like me as a person, whether or not you believe I could be a good trader or a bad trader, I've created something that is somewhat of an anomaly. And the anomaly is this. I've built you a program. It is 100% mine. And after 10 years, that program can predict, using recurring behavior patterns in any market you're trading, the movements out 5 days into the future for any futures, Forex, or equities position. All right? GC, yeah, sure. GC on a 5-minute chart. Dang that stupid phone. Okay.
Call from.
Let's wait for this stupid phone call to go by.
7445
Okay.
70015.
So Brian, these are 2 days of gold right here.
081 7445
So we can start
70015.
we can start back here. I asked my wife, why do we have a phone anymore? If the only people who call it are telemarketers. Okay, so Brian, ready? We'll use the same 3 setups that we talked about, right? Short at 6:15, short at the puncture here at 7:10. Okay. Short at 7:35. Short at the puncture here at 8:55. Short here with a stop out. Okay, so just keeping track using the same signals. We're basically flat on this one. Here we're up 2.6, I think. This one you're in 1.7. And then I'm going to call this one a break even, Brian, because it made it down 30 ticks off that short before it came back to where it started. So we'll call that a +1, with your permission. And then over here, we had a stop out at the US Open. It just flared up and went the other way. Okay, you with me so far, Brian? The next signal was a version of this setup here. Was a D pattern. So 11:40 yesterday was a D pattern. We're waiting for a puncture of the counter trend setup, waiting for the exhaustion to finish at 11:46. The entry is at the puncture of the white line. The stop, Brian, would be above the puncture candle right here. You can hold the trade until the next time window, which would be 1:25 in the afternoon. Okay. That was good for, what is that, 60 ticks? 60 ticks. 1:25 until 2:40, you made a whopping 4 ticks, but it looks like it made it almost 15 down the other way. There was no puncture here at 2:40, and then 3:30 into 4 o'clock was another 4 ticks. So what is that? Let's call that 25, 40, 41, 33, 93, 97, 111 ticks. Call it 100 ticks per contract. Using those 2 setups. One, two, three, four, five, 6, 7, 8. 7 out of 8. So there's two guys in the woods, and they come upon this huge hole in the ground. And they look down, and the one camper says to the other guy, says, "Man, I can't even see the bottom of that hole." Camper says, "Me either." They look to the side, and they see that there's a huge concrete block. And he said, "I wonder how far down the hole goes." So he reaches down, he picks up the block, and he throws it in the hole. And they lean over the hole. I'll tell you in a second, Brian. And they listen with their ears, Mary, pointed towards the bottom of the hole, and they don't hear anything. But about 2 or 3 seconds later, the silence changes to "nyeh," and they look, and this goat comes running towards the hole, jumps up, and the goat dives down into the hole after the brick. And the guy turns to his friend and says, "What the heck was that?" "I don't know. That's kind of weird." About a minute later, guy walks over in coveralls. He looks like a farmer. And he goes, "Either of you see a goat come through here?" And the second camper turns to the farmer and he says, "You sure better believe we did. That goat came running out of the woods. It jumped up and it dove into this hole." Farmer scratches his head and he says, "That's impossible." First camper says, "Why?" He goes, "I had him tied to a concrete block." So this program, Brian, is a pretty awesome program. And you can have it. I want you to have it. I want everyone who doesn't have it. The name of the program is called the Tachyon Time Warp. And the link, if you would like to get the software today, it's actually on sale. It's pretty cool. Look in your chat box. You'll see a link for it. It should say backtothefuturetrading.com/tachyon-time-warp. There's a little bit of the history behind it and what the software does, how it works. At the very end is a link. I have another joke, Mary, if you can wait. Give me one more. I have one more joke for you before we leave. Just let me wrap it up here, and I promise it's worth your time. You click on the Buy Now button. And where it says promo code, Brian, you're going to use one word, W-A, lowercase, W-A-R-P-O-F-F. Warp off. Warp off. And if you hit the apply button, Brian, it takes $500 off the price. This comes with 2 hours of me setting up your charts one-on-one time. If you need them, I'll teach you everything I know about it on the market that you're trying to trade with using the software that you're already using. If you want to integrate the two things, I'll give you my best settings, all of my workspaces, templates. We'll record all of the classes. You have lifetime access to our basic training room with Rachel. You have lifetime access to the video training archive where all of our classes that we've recorded in the past are stored. You have access to 2 computer licenses, so you can put one program on a laptop, one on a desktop, however you want to shift those licenses around. And you have the discount for $500 off today. So 2 hours personalized mentoring with me, ongoing training with Rachel for free, video archives whenever you want to do your training, all of my workspaces and templates. All of that is included to help get you started. Average learning curve, just so you know, is 6 to 8 weeks before you feel like you can take your back-tested strategies and forward trade them in a sim contract to start, and then moving forward into live once your trading plan and money management plans are put in place. Okay. Nathan, you are special, dude. I really appreciate you, by the way. Thank you again for what you did. I think that's pretty awesome. This differs, Brian, from the original software we produced. It was called the Flux. Okay, Brian, that original program was called the Flux Professional. And Brian, that original software used, it's currently known as Prime. That program used oscillators as filters. It used MACD, CCI, an SMA, as well as a Stoke. And Brian, one of the things we learned using those oscillators was that the filters themselves that we were using to find the time signals had lag. By their very nature, Brian, the MACD, CCI, SMA had a moving average component in them. They were lagging in that sense. And so you were also only ever allowed to look vertically on a calendar. So you could look at Monday, 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 so on and so forth. The time warp is not based on oscillators. It's based on actual pivots in the market. So we're looking at the exact times, Brian, in the past that the markets have gone up or down. You can set the size of the moves that you want to look for by adjusting the swing strength. So if you're only interested in 30 and 40 tick CL moves, you can dial that in and focus on the times that historically have produced those size moves. My swing strength in all of my charts except the DAX is 8. On the DAX, it's 15. In addition to that, you can look vertically and horizontally, which means you can go back, look at the past 2 Mondays. You can look at the last 4 FOMC dates. You can look at the last 4 crude inventory report dates. You can look 1 day back, 2 days back, 7 days, and 14 days. You can look at a myriad of historical behavior patterns that aren't just limited to a vertical analysis. The biggest thing, Brian, is that the new software incorporates the 7 patterns. If you look in your chat box, you'll see that I've given you a book here. Whoop, clicked on the wrong one. Brian, you know this book that has the 7 different patterns in them, including those weird ones that are hard to understand, like the 4, where a red dot goes up and a green dot goes down. The software actually incorporates the patterns and automatically tells you in real time when they're occurring. I have them turned off here to keep it simple, but Brian, when I reactivate all of my signals, let me reload it here. There you go. So Brian, can you see how some of the signals now have arrows with weird numbers next to them? As you get more advanced with the software, over 10 years, I've learned which times are going to reverse and do the opposite of what was expected. So the warp incorporates all 7 patterns automatically. It's intelligent software now and tells you when the times are going to be highs at a buying pressure time and lows at a selling pressure time. And in the lower left corner, Brian, can you see how it has the text message telling you what each of the patterns means? So for example, if we clicked at the pattern 4 right here, it says observational notes, immediate market reversal possible on time signal or bar on either side of pattern 4 alert candle. If market punches through pattern 4 candle lows, trend continuation downwards possible until the next signal. Does that make sense? So 98% of the time, if you see me using the software, in the very beginning, Brian, I turn those patterns off because they confuse people, but as they begin to use them more, it makes more sense. And Wakar, my settings are generally a swing strength of 8 with a 7 and a 14-day look back. Nathan, the only reason I used the 15 that one time is because I accidentally transferred the template from the DAX over to the NQ when I rebuilt my chart. And I forgot to check that one day. General practice, it's all 8 except the DAX, which is 15. So that's a pretty big difference. If you didn't get the old stuff that we used to have, the warp is sort of like the flux wet dream. Everything we always wanted, but we couldn't incorporate because of the programmer we were working with. Everything was very structured and limited the way he did the first version. This is also NT7 and NT8 compliant. So you can use either one of the platforms there. All right, so we covered how to get the software. It is $19.95 with the promo code WARPOFF. Comes with all the training, all the personal mentoring, the one-on-one time, the custom templates, workspaces, the best practices, the basic training room, Monday, Tuesday, Wednesday from 8:30 to 11:30. I think it's 11. A lot going on there. Last joke, and then we go. There's 2 guys that are camping in the woods, and they're sitting around a fire. And Mary, a snake, crawls out of the woods and bites one of the campers on the rear end. Crunch. This guy loses his mind. He falls to the ground in intense pain, starts sweating. He's got a fever. He tells the second guy to go get help. The second guy follows their tracks all the way back to town. And he finds the local doctor in the middle of the night. Knocks on the door. Boop, 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 boop. Nobody comes. Knocks on the door again. Boop, 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 boop. Come on! Doctor finally comes to the door. The guy explains what happens. The doctor rubs his eyes. He looks at his friend. He looks at the guy standing at his door and he says, listen, your friend's in a lot of trouble and you're the only person who can save his life. You need to, as quickly as you can, get back to the campsite and suck the poison out of the wound before it spreads to his heart and it kills him. Guy says, what? He says, it's the only way to do it. Hurry, now go. And Mary, he climbs all the way back up to the top of the mountain at the campsite. He sees his friend. His friend's in intense pain. He's starting to black out. He says, what did the doctor say? Looks his friend in the eyes and he says, he said, you're going to die. That's my joke. That's my joke. I'm done. I only know 3 of them and you guys heard 2 of them. So appreciate that. Listen, 10 years, I can't fake this stuff. I'm not as good of a trader as some of you are, but I'll tell you what, I'm one of the best teachers and engineers in the Ninja Trader or any other ecosystem. Been around for 10 years, been exposed to a lot more people than the Mikes of the world, and I'm okay with it. I believe in myself. I believe in the results that other customers have had with our software, and I'm finally getting comfortable as a 46-year-old man with the market I fell in love with when I first started, but it took me a while to figure out what I wanted to do with it. And you know what? I didn't lose $100,000 while I was learning. So